What's going on, guys? So today I'm gonna discuss the Jackson Hole, right? The main focus today was about Jerome Powell giving his comments. Hopefully, you was watching. You guys follow me on social media. You're paying attention to the stories and also watching previous video just to give you guys hints, right? So always tune up for our Sundays weekly prep calls, right? Because this was the main focus for the week. As you could just look at market moves that happened today, this was the reason why, right? We had a lot of consolidation throughout the whole week because they are waiting for Jerome Powell pretty much to give us a hint. Okay. So good job for you guys that took advantage. Right here, for you guys that don't know, this is my private group for the Discord, right? I trade live with them every single day. And if you guys are interested, just don't hesitate to reach out if I could give you more details, right? Because I like to focus more on fundamentals, economic data, news events, so I could take advantage of the easiest trades possible. All right. So jumping into the Jackson Hole, I'm not going to bore you with all the stuff, right? But when it comes to paying attention with Jerome Powell, we understand that the main focus, markets, even Donald Trump is trying to pressure the Federal Reserve to cut interest rates. And what happened lately this whole year, ever since Trump came into administration, Powell is not cutting rates, right? He's blaming it on tariffs. He wants to give tariffs time so that he could actually see the implement of inflation caused from tariffs, right? Before they actually make a decision to cut interest rates. So he's been leaving rates where they are for this whole entire year, right? He's just been pausing rates, saying that we're going to be data dependent. So before the event, I was expecting him to continue that tone, right? I believe it was Wednesday. I bought USD JPY and I was holding it, just to give you guys detail. I got out right before the meeting, but I bought I bought right here at this breaker structure, and I caught the whole move. So before the Jackson hole, I was expecting the markets to preset the markets to preset a direction, because right here we can see how the dollar has been rising for this week, because not just me, markets was probably anticipating Jerome Powell to stay his course, right? Saying that we're going to be cautious. The labor markets is actually tight. They're still strong. Inflation, we still have to be worried about higher inflation. We're going to stay data dependent because of tariffs. That's most likely what he's been saying every single rate decision. This one is different because this Jackson hole was actually his last one because he's actually going to be out of here next year, right? We already been seeing the drama with Trump saying that he wants to fire him immediately. So one of the key things, I know there's a lot of headlines that comes out when he speaks, but right here was the main focus of what he was saying about labor data, right? About growth. He's seeing growth numbers to actually start dropping sharply, right? That gives that fear, right? Also, he said that a reasonable base case is inflation effects of tariffs will be short lived. Tariffs is a one time price increase, right? So, him saying that, before he was saying the fears, right? We don't want to cut rates if tariffs is still impacting higher inflation. Now that he's saying that the situation is only going to be a one time increase in inflation. So it's temporary. So he's expecting the spike of inflation to be temporary, and then we're going to start seeing actual inflation drop. So that was a trigger, right? That on top of him saying that the labor markets is easing. Why is that important? Because the whole purpose of the Federal Reserve keeping interest rates high is to hurt the labor markets, right? Is to hurt growth. If we could see growth is actually lowering, labor markets is actually pushing down, that also contributes to lower inflation, right? Because if you can't have a job because of you got fired because of growth, right? You can't have increases in wages because of the labor markets is taking a hit. You cannot afford to pay for those higher price goods. So that's why they keep interest rates at those high levels. You can't is high interest rates. Businesses don't want to take loans, so they're going to want to start firing people, letting people go, just so that they could ease up on their company, right? So that's why, like, just to give you guys a quick breakdown, how most people don't really pay attention to this stuff because I understand in the industry they tell you to stay away from it. But hopefully today was like a clear example of this wasn't price action like oh technicals aligned with it. Like literally when he gave out these details, that's what set up for a really clean opportunity for equity upside. So why did equities push higher? So we could just start off with Nasdaq because this could also help you guys look for potential trades in the future when you're trading these type of events. Like I didn't, I don't know if you guys was watching it, but the I think US 30 was moving first because when I pushed the live call, US 30 was moving first before actually 10, and then you just see US 30 was just the biggest mover. So I don't want to say inside trading and stuff is going on, but it's no coincidence that US 30 was rising before he even said anything. But just look at market structure, right? Because what he said when we're focusing on monetary policy reactions. Are we going to get, just to give you guys an example, right? Because this is the prep that we did on Sunday. So he's going to speak on inflation, interest rates, and economy's big challenges, right? So he spoke on inflation. He said inflation increase is going to be temporary. Interest rates, he really didn't give us anything. He didn't really give us a clear signal yet that, oh, we're definitely going to cut rates in September. He didn't say that, right? We still have a lot of data from now till the ending of next month to that rate decision, right? He didn't say that, but the hints that he did gave more of a dovish tone than a hawkish one, right? So tariffs having an impact on inflation. He said that's temporary. Is the job market's really not getting any weaker? He confirmed that the job markets is getting weaker. So then now the September meeting, markets is already pre-pricing that in that is going to be a cut. So he answered our questions, and that's what led up to our tradable opportunities, right? So now when you look at equities, it's like how in the hell could I enter that type of trade, right? So I don't want to do the replay mode, but this is why I like to look at market structure, right? I like to focus on support and resistance zones because if he gives us a dovish reaction, he's anticipating rate cuts, right? We have this range already. And all we need to do is, if I understand if he's going to be dovish, he's going to confirm rate cuts. That supports the stock market. That supports stocks to rally, right? So if I see the fact him answering those questions and he's dovish, I will be looking for equities to be one directional. And that's what happened, right? And that's why the markets bought equities as we broke above resistance. We broke above that zone of 32,200. And then we also broke above 320. And then that's when price continued. At this zone, you can see that this is an area of resistance where you could look for buys once we break above. And then also this zone, right? You could go all the way to the left where that could have signaled for additional buys as well. So they gave you two opportunities of entries for this rate decision. I mean, for this Jackson hole. And as you can just see, it just took off, right? So that's one of the reasons you don't have to complicate your price action, your trading. You just have to understand the direction and know why, right? That's one of the reasons why we had a big move. So let me just go over also dollar first, and then we could look at opportunities to pay attention to moving forward, right? Because with this dovish reaction, it also weakened the dollar and it weakened the yields, right? So these are all the dollar pairs, as you can see. So also gold pushed higher too due to a weaker dollar and weaker yields, right? So you could just take your pick. Like I love trading USD JPY in these type of situations because when the dollar and the yields is reacting to monetary policy, the yen does the opposite. So it makes it for that. That's the reason why we see GJ also pushing lower as well due to a stronger yen, because we saw that we had weakness in the yields in the dollar, which strengthens the yen currency, right? So that's why GJ pushed lower. So that's why I love trading UJ when we have economic data or any news events that impacts interest rates. So just like how I went over NASDAQ, right? Gold was sitting at this range right here. We were sitting at that range. And as price broke above 33.35, that was when dollar started breaking below its support of 98,450. So when that happened, you could just look at market structure for all the pairs. it all broke above resistance following, and you like weaker dollar, you could see that USD JPY broke below support. So you could just see it's not a coincidence that everything is timed perfectly. They're all reacting at the same time. It shows that the markets was really focusing on this event, and this is why we had this reaction. Okay, so this was what this means now is that markets is expecting for Jerome Powell to cut rates, the Federal Reserve to cut rates next month. Okay, they're already pricing in two rate cuts this year, so it's most likely next month and probably December. We still have economic data moving forward, so just take notes. All right, if we see labor data coming in lower, right? So NFP is going to be next month, that first Friday. If those NFP numbers come in bad, definitely already priced in. Okay. If we get inflation numbers actually coming in lower, that would probably just be the main focus moving forward. But what we could focus on for reversals, that would be if NFP next month comes in extremely strong. We see strong labor data because they're expecting easing in labor data, right? So that means jobless claims that we get every week. If we see NFP numbers, or I mean unemployment data, if we see anything with jobs coming in good, that would most likely can make them want to continue to not cut rates, okay? Because they're actually making the markets believe they're going to cut because they finally said that the labor markets are easing. So if we see that the labor markets are still strong, that would most likely cause a hawkish reaction, which would be stronger dollar, weaker equities. Okay. And then also inflation. If inflation is rising, that first inflation print, a higher inflation print, I don't think it's not going to make a big difference because it's already expected as what he said. But if we get a print that's higher than expected, like extremely high, like if we see inflation go above 3% again, that will most likely be a reason for them to not want to cut. All right. So that's the things that you want to pay attention to. So the fact that we already got reactions, you want to be cautious, right? Because the markets is just not going to be one-sided. But as of now, right, we're most likely going to see this type of direction with weaker dollar and stronger equities as long as things remain the same from more of a macro perspective, because this right here, this is the CME report. So this is just giving us future probabilities of interest rates. So right now we're at an 84% chance of easing. Okay, so this is probably going to go a little higher depending on the data moving forward. So what we're going to see, right? Probably what it depends on what happens next week, because we also have to remember dollar is also a safe haven, right? So if we see that wars is spiking off, right, Russia and Ukraine escalations continue, that could probably help dollar push up and spike up as a safe haven, right? But that will probably set up for better opportunities for sales, because we understand now we have a we have a direction. So and as we can see, dollar didn't break this support yet. This key, look at this key area support that dollar is still holding. What we could probably pay attention to, right? We could see dollar start chugging up a bit, hitting a key zone, maybe around 98 200. As we could start rejecting that area, that could most likely set up for better sell opportunities moving forward. But if dollar just starts breaking below that support, right? We just don't get no pullback. We just break below support and continue lower. We're probably going to hit that zone of 97.0. All right. But I like pullbacks, because if we get an impulse reaction, right, you can just see we impulsed here, we consolidated, and then we break lower, right? So you just have to pay attention to that. We are either, what we're going to see with price action moving forward towards next week is that we got to push lower. We could either see consolidation or we could see a pullback. Then right after that move, if we get economic data, news events, right, that confirms a dovish reaction, we'll see dollar then break lower after that structure. If we see the opposite, then instead of seeing dollar pushing lower right after the correction, we could see it actually push higher, right? Depending on if we get strong labor data and strong inflation. And the same thing is for equities, because everything just impulsed, right? So you don't want to get FOMO, right? That's the hardest part, is after we get a big move, we we tend to feel like we're missing out on something, and it's not true. All right. So just let the markets do its thing. You guys, if you took advantage, good job. So if you like these type of videos, guys, subscribe. And the timing of the videos, just so that you guys don't miss out on anything. Also hit that notification bell so every time I post a video, you get notified. All right. And also you can be able to join the live calls when I go live. If you guys need any help, any questions, don't hesitate to go in the comments or message me on IG. Have a good one, guys.